This is Nightly Business Report with Tyler Matheson and Susie Gehring.
A perfect 10, the Dow registers its first 10-day win streak since 1996 and posts another all-time high. The S&P is just 2 points away.
New Treasury Secretary Jack Lew weighs in on the markets and the American economy. His interview just ahead.
And the TSA under fire, the growing backlash over knives on planes. What every traveler needs to know. Good evening, everyone, and welcome to our public television viewers. Susie, the market beat just goes on and on.
It's like the Energizer Bunny. It just
absolutely.
keeps going and going. The Wall Street rally marches on higher for the 10th day in a row, the first time that's happened since November of 1996. The Dow shot up another 84 points and ended with another all-time closing high at 14,539. The Nasdaq added 14, and the broader S&P 500 gained almost 9 points, and it's now just 2 points away from its own record high close. There is some concern that the rise in the markets may have been too high, too fast, and this could be the start of a market bubble. But newly installed Treasury Secretary Jack Lew tells Steve Leisman not so.
The analysis I've seen doesn't give me reason to be worried right now.
We'll have more of Steve's interview with the Treasury Secretary in just a few minutes.
As the Dow hits unprecedented heights and the S&P 500 nears its own peak tantalizingly close to it, there's a battle below the surface that could determine which way stocks go from here. Jackie DeAngelis explains.
The bulls are at it again. Another day, another all-time high for the Dow. But despite the impressive run, there's an underlying tug-of-war being played out in the U.S. economy.
We had a couple of huge risks hanging over the global economy for the last year. Would China have a hard landing? Would the euro break up? Would America fall over its fiscal cliff? None of those things happened.
But several good things have happened, including more signs today of a turnaround in the labor market. The number of people claiming initial jobless claims falling last week to a lower than expected 332,000. That following last Friday's February employment report, which showed the unemployment rate fell to its lowest level since 2008. But while the outlook on jobs is improving, inflation is putting more pressure on U.S. businesses. Producer prices, or the cost of businesses to manufacture goods, rose again in February, climbing nearly 1.7% in just the past year, pushed higher by rising gas prices. At the same time, the U.S. dollar has shown some relative strength, up 4% in just the past 2 months against the other major currencies. And while a stronger dollar sounds great, it can actually hurt American business, making U.S. exports more expensive to foreign buyers.
To the extent that you continue to see the dollar appreciate, it means that you want to be a little more cautious about buying multinational companies whose profits get weakened when the dollar goes up.
So far, the tug-of-war playing out in the economy hasn't been enough to derail this rally. But experts on Wall Street caution that even the strongest markets face headwinds.
It would be completely irresponsible not to expect some sort of volatility, within the first half of this year. But there's a soft floor for equities, and any discount like that presents a buying opportunity.
For Nightly Business Report, I'm Jackie DeAngelis.
Let's delve a little bit deeper into the rally and get a pulse of the individual investor along the way. Brian Belsky, Chief Investment Strategist at BMO Capital Markets, and John Sweeney heads up Retirement Services for Fidelity. Welcome to both of you. Mr. Sweeney, let me begin with you. I know that you have a survey that you're going to give us a sneak peek look at tonight. It doesn't really come out until tomorrow, in which you look at what you call high net worth investors, people with more than $250,000 in investable assets. And the results of that survey indicate that those individuals are getting more bullish, and specifically more bullish on U.S. stocks. Tell me.
That's right, Tyler. So we were pleased to see that a message that we've been trying to get into the market for about 14 months now is really resonating with investors. You've seen this in the flows into equity mutual funds over this period of time. Certainly the recent euphoria in the market has been something that has attracted a lot of media attention. What we like to try and remind investors is not 10 days, but really 10 years you want to be focusing on when you think about equities.
Brian, let me ask you about the strength of this rally. Is this just a market rally, or is it something bigger? Is this the beginning of a bull market cycle?
Well, when you take a look at major bull markets, typically they start when doubt is very high, and what I like to call this the bunker bull market. Most investors are still in the bunker and not believing it. And so from a longer term perspective, we think we're on the cusp of the next great equity bull market that could be 15 years in length. That doesn't mean we can't have some periods of excess volatility and even down years. Case in point, if you take a look at the 1982 to 2000 bull market, 1987 was a volatile year, if you remember. 1994 was a volatile and flat year. So we could have some periods like that. But the bottom line is we believe that individual investors are very underweight equities, and institutional investors around the world are extremely underweight U.S. stocks. And we think from a fundamental perspective, U.S. companies are the best and most attractive asset in the world.
Well, that certainly seems to be, Brian, what the folks who responded to John Sweeney's survey are indicating, because they indicated that 2/3 of them were going to put money into U.S. stocks. Mr. Sweeney, let me ask you, do you see what Brian sees in your complex there at Fidelity, namely that people are still underweight U.S. stocks compared with what they ought to be? And is that behavior changing? Is the flow of funds more into equities so far this year or not?
It is, Tyler. We're seeing more flows into equities this year, which is a good trend. Obviously, we've seen about $1.3 trillion cycle into bond funds over the last 4 years, and that's really rocking the boat to one gunnel. And really what we need to do is get people back to the middle. When you think about a diversified portfolio on a long secular trend, we're going to see people continue to buy fixed income as the population in America ages. But I think that we need to keep inflation in mind when we think about allocations to equities. Equities are the only place that is really going to outpace inflation over long periods of time. And people investing in whether it's for accumulation or even income distribution need to be thinking about inflation when they think about their allocation to equities.
Brian, I want to ask you about, we're all waiting for the S&P to hit its closing high, just a few points away. For investors, and I guess for market strategists, which is more important for you to see the strength of this rally? Is it these new highs on 30 Dow components, or is it the S&P 500?
It's really the S&P 500. For instance, we do not forecast 30 stocks. We forecast a target both in terms of price and earnings, Susie, for the S&P 500. I'll remind investors that our target last year was 1425, and the market closed at 1426. This year's target is 1575. Clearly, we're within reach of that, and it has an upward bend, especially given the fundamental construct of the U.S. market we think can improve over the second half of the year. But the 500 stocks of the S&P clearly are a much more diversified way to look at the U.S. market, and frankly, U.S. investors, U.S. portfolio managers benchmark themselves against the S&P 500, not the Dow. So that's really the clear component that most investors should really focus on, and it would be a really key element with respect to the longer-term strength of the U.S. market.
You said that bull markets go up and down and along the way. I mean, what could jolt this market?
Well, we think from a macro perspective, it's employment. Employment's the great circle of life. That's why housing's come back. That's why the stock market's come back. That's why the economy's come back. If we see some sort of bump in the road with respect to employment, I think that could really surprise people. Now, from an historical perspective, the job gains that we're seeing relative to history are very slow. That's why we like to talk about the construct of the U.S. market in a bit of a nursery rhyme type of situation where it's the little engine that could. We continue to kind of climb higher and trudge higher. Slow job growth, slow GDP growth, slow earnings growth, and low interest rates is a great time to be invested in equities. Now, bear in mind, investing is not a binary event. You have to be diversified. You have to own some fixed income. You have to own some commodities. You have to own some real estate, and you have to own some equities. It's not an either-or type of event, but overall, from a longer-term perspective, we still believe that people are underexposed equities because of the ills of the last 20 years.
John, I really want to ask Brian. He said 1425 close on the S&P. It closed at 1426. I don't know how he got it so wrong there, but at any rate, I ask you this: when baby boomers start to retire and pull money out of their accounts to pay for expenses, what do you think is going to happen to equities?
You know, Tyler, the important thing is, as Brian mentioned, is you want to keep exposure to equities. Within your diversified portfolio, equities are going to be the place that outpaces inflation. So what we ask folks to think about is when they're planning for a 30-year time frame in retirement, really have a significant allocation to equities. For a 65-year-old, that means almost 50% of their portfolio. Clearly, over the last 5 years, that's been a difficult market to weather through, as the equities have had a significant pullback over the last 5 years. But really, when they keep a perspective of how long they're going to need their money to last, a 30-year time frame, equities provide a really good growth prospect for them over time.
So I take it then, if investors do what you think they ought to do, there would be relatively little effect on equity values.
You know, I think over long periods of time, you're going to continue to have people pull money out, as you suggested, but the economy is going to continue to grow, whether it's population growth, manufacturing growth. The U.S. economy is well poised to capitalize on that from our perspective.
Gentlemen, thank you very much. Brian Belsky, John Sweeney, appreciate you being with us. The Treasury Secretary Jack Lew, just days on the job, visited a Siemens plant outside Atlanta today, highlighting the importance of investing in new infrastructure and manufacturing and creating new jobs. Steve Leisman spoke with Lew about his role at Treasury, the budget negotiations in Washington, and the challenges the U.S. economy still faces.
Treasury Secretary Jack Lew, in some of his first comments in the new position, talking about the value of the dollar, the budget deficit, and the economy. I began my interview with him by asking whether or not equities, which have seen new highs day after day, are in what he would consider to be a bubble.
The analysis I've seen doesn't give me reason to be worried right now. I think one of the lessons we learned from 2008, 2009 is that even when things are not a problem, we always have to ask those questions. We need to make sure that we have the transparency to see what's going on in firms, in markets. We need to have the regulatory tools to deal with problems as they develop. That doesn't mean we should jump in when we don't see a problem.
Every Treasury Secretary serves at the pleasure of the President. You have no way of knowing how long you'll be in the office or how much time you'll have to do it. But at the end of your tenure in the Secretary's position, what is the shape of Fannie Mae and Freddie Mac? What are they? Have they changed at all from their current status?
We'll have more to say about it in the future, but I think the first order of business is while we have interest rates in the very attractive place they are now, as the President said over and over again, American families can lower their bills by $3,000 if they refinance. It's good for the families, it's good for the economy, it creates jobs. There's no reason not to do it.
On the issue of the dollar, Secretary Lew said he supported the position of his predecessors in favor of a strong dollar policy. On the issue of the budget and the big battle over sequestration, Secretary Lew said he thought he heard cooler heads prevailing and seemed somewhat optimistic that a deal could be reached that would end the automatic sequestration cuts. For Nightly Business Report, Steve Leisman in Alpharetta, Georgia.
Meanwhile, Timothy Geithner will write a behind-the-scenes book on the financial crisis and how he and other officials debated and worked together. Crown Publishers commissioned the book and made the announcement today. The book is due out next year. No word on what Crown is paying Mr. Geithner.
Well, speaking of the financial crisis, the second report card on the health of U.S. banks came out late today with mixed results. The Federal Reserve rejected the capital plans from BB&T Bank and Ally Financial, which was the only bank to fail the original test that came out last week. Goldman Sachs and J.P. Morgan got only conditional approvals and were told to revise their plans by the third quarter. The Fed approved the plans from the nation's other 14 banks for dividends and their share repurchases, but American Express will have to submit an adjusted capital plan after the Fed said its proposal would have eroded its capital position too much. Now, the central bank said these so-called stress tests show that overall American banks have sufficient reserves to withstand another severe economic downturn. Tyler?
Analyst comments sent two major tech stocks in opposite directions today, and that tops our market focus for this evening. Amazon dropping as J.P. Morgan lowers the company to neutral from overweight because of gross profit margin concerns, and Amazon closed off more than 3% at $265 and change. Meanwhile, Apple was up on the day. Its competitor Samsung reveals a new smartphone. BTIG analyst Walter Piecyk says there are significant revenue opportunities still for Apple, and that brought Apple up almost 1% to $432.50. We'll have more on that new Samsung phone a bit later tonight.
Legendary investor Kirk Kerkorian says he wants to raise his 18% stake in MGM to as much as 25%. That made MGM a big winner today, up almost 7%. Men's Warehouse shares surging after the company said it was considering strategic alternatives for its K&G unit. The company also said its fourth quarter loss had narrowed. Shares jumped 19% to $34 and change. Teen retailer Aeropostale reported better than expected revenues and earnings after the bell today, but the company sees a first quarter loss ahead. Analysts were expecting a small gain. Shares dropped more than 5% in after-hours trading.
And Susie, E-Trade's largest shareholder, Citadel, is dumping its entire stake in the online broker. The hedge fund had been pushing for E-Trade to sell itself. Shares of E-Trade off 8.2%.
Intuitive Surgical got a negative recommendation from the American College of Gynecologists, and that sent its shares down. The group's president said there is no good data proving that robotic surgery for hysterectomies is as good as other techniques. The stock lost almost 4%, closing at $489.89.
And coming up, the change in TSA policy that could make for shorter lines at airport security. But does it come with a price? First, though, 126 S&P 500 companies traded at new 52-week highs during today's session. That's about 25% of the index. 57 of those names hit new all-time highs. And here's a look at some of them.
A lawyer who represented Chrysler during its bankruptcy restructuring has been chosen by Michigan's governor to be the emergency manager of Detroit. Kevin Orr will try to fix the city's finances and try to avoid a bankruptcy. Detroit is now the largest American city ever to have its finances placed under state control. There's also trouble in many of the nation's counties. New figures from the Census Bureau show a record number of U.S. counties, more than 1 in 3, are dying off as aging populations and weak economies force young adults to look elsewhere for jobs.
Airport safety officials say they are allowing small knives and items like golf clubs on aircraft again to conform with international standards and make airport security checkpoints move more freely. But the decision by the TSA, particularly about the knives, has been met with a storm of protests from a broad range of groups. Hampton Pearson has more.
Today, the growing backlash against the TSA's decision to allow passengers to carry small knives on planes starting next month made its way to Capitol Hill. A coalition of flight attendants, pilots, and air marshals joined Massachusetts Congressman Ed Markey, who has introduced the No Knives Act to block the TSA move.
We will not rest until America's flight attendants, pilots, air marshals, and passengers are protected.
Any way you slice it, a knife like this is a weapon and it doesn't belong on an airplane.
Opposition also includes the union that represents some 45,000 TSA screeners, as well as at least 3 major airlines, US Air, American, and Delta. But reaction among passengers is surprisingly mixed.
I don't think it would endanger anyone. It can't. It's just such a small thing.
I just think it's totally wrong and unacceptable. I fly all the time, and I do not like the idea of having knives on the plane.
Embattled TSA Chief John Pistole is not budging, telling lawmakers at a House Homeland Security hearing this afternoon the agency focus is on terrorists using explosives to blow up planes, not knives.
It is the judgment of many security experts worldwide, which I agree with, that a small pocket knife is simply not going to result in the catastrophic failure of an aircraft. And an improvised explosive device will.
While the marquee No Knives bill has bipartisan support, the question is, can it get through both houses of Congress before the April 25th TSA policy change? For Nightly Business Report, I'm Hampton Pearson in Washington.
And tomorrow on Nightly Business Report, we'll be looking at the impact of higher energy costs on the Consumer Price Index. We'll learn how confident consumers are right now, University of Michigan survey out, and we'll get Alan Greenspan's views on the economy right now. But first, here's a look at the international markets and how they did today.
A big night in the Big Apple for Samsung tonight. It's expected to launch its newest smartphone, the Galaxy S4. The company rented New York's Radio City Music Hall for the unveiling tonight. Samsung hopes that the S4 will help it gain share over Apple's popular iPhone. Apple is still #1 in the U.S. with 34% share. Samsung has 19%. Joining us with more on what to expect, Dennis Berman from the Wall Street Journal. So, Dennis, a lot of hype for this new Samsung phone. What's new? What are the bells and whistles? What can you tell us?
Well, of course, the hype is it's supposed to be unveiled at Radio City Music Hall. They chose a pretty cool venue for it. They're not saying precisely, but there have been some things that have leaked out. There have been some speculation. One of the possibilities is perhaps that the phone follows your eye. So as you look at your phone, and I'm looking down at an imaginary phone, it knows as your eye moves, and it can perhaps adjust its web browser or do a number of other functions as it monitors your own eye. So pretty crazy science fiction stuff, if it happens to be true.
You know, one of the things I've noticed about Samsung's devices, Dennis, is that they tend to be slightly larger, particularly the screen size tends to be larger than many of the competitors. Is this one of the things that they think differentiates them from the rest of the class and gives them an edge?
Well, Tyler, I got to tell you, you go to Asia, and it is not a taboo thing to have a large phone that perhaps almost even looks like a big piece of bread that you're holding up to your ear. It just culturally is different. And what's interesting is that we're really seeing that change. People's attitudes and behaviors change here in the U.S. as well. The bigger phone. Of course, they now call it a phone/tablet. They're calling it a phablet. Terrible name, but they're calling it a phablet. And it really is changing how people use their phones. They can look at a bigger screen. They can do more with it. They can read books more easily. And that, in fact, is killing Barnes & Noble's own reading product, the Nook.
Dennis, where does this leave Apple? It's not going to have a new launch of its iPhone. It's months away. I mean, what kind of damage could Samsung do in the meantime?
Well, we've really seen a change in perceptions. The fact that we're talking about a Samsung phone launch is in itself sort of an important moment in time. Apple's the stock has come down, but it still has the leading share of smartphones in the United States. It still makes an incredible sum of money every quarter. It's still an incredibly impressive company. But again, the perceptions are changing, and on the margins, people are more willing to consider a Samsung smartphone. And we've seen it remarkably. When an Apple executive talked to the Wall Street Journal and some other outlets yesterday, he went on the defensive or the offensive, basically trashing the products that Samsung has. So they definitely feel the threat, the heat bearing down on them.
All right, Dennis, here's the question of the hour. What kind of phone do you carry?
I carry an iPhone. I'm happy with my iPhone. I used to have a BlackBerry for 10 years, Tyler, and unfortunately it sort of went by the way. So that's the other sort of casualty through all this. The biggest loser, of course, has been Nokia and BlackBerry. People just aren't carrying them as much as they used to.
Is Apple your choice because it integrates your life? In other words, your photos that you have, your music that you have? Why do you choose it?
I'd say that's probably the reason. You could say it dominates my life, perhaps too much. That was the criticism, in fact, that the Apple executive Phil Schiller made against Samsung, is that it's not truly seamlessly integrated in the way that Apple is. And of course, a lot of people in the U.S. still agree, and they prefer Apple. But Samsung is going to make a difference, and we'll see tonight whether the hype lives up to the advanced billing.
All right, well, enjoy the launch. Dennis Berman from the Wall Street Journal. And coming up tomorrow, John Ford looks at the generational shift in mobile, why Samsung might be replacing Apple as the cool kid on the block. I got an iPhone. It's not even a year yet. And I thought I was hip and cool. Now I guess I'm not hip and cool anymore.
I'm hip and cool. This is a Motorola. I'm one of 10%, as our pie chart showed there. And what Dennis said was very interesting. I think there is a switch that people want bigger screens. This phone is a quite thin phone. It's light, might not appeal to ladies who want to carry something small in their purse, but it has a bigger screen, and I think that's a big selling point for a lot of these new generation phones. Watch Apple. I'll bet they come out with a bigger screen.
Soon it's going to be the size of your iPad, like Dennis was saying, that there's no hang-up about holding this big piece by your ear.
And isn't it interesting that the cool factor may have flowed away a little bit from Apple, particularly among younger users?
I want to be hip and cool.
You are.
That's Nightly Business Report for tonight. Thanks for watching, everyone. And remember, support your public television station.
And on behalf of your public television station, thank you so much for your support. Have a great evening, everyone. We hope to see you right back here tomorrow night.
I'm Susie Garrett with the Nightly Business Report News Brief. The record-breaking rally on Wall Street continues. The Dow surged 84 points higher for the 10th session in a row, ending the day at another all-time closing high of 14,539. The Nasdaq rose nearly 14 points, and the broader S&P 500 up almost 9 points. It's just 2 points shy of its own record-high close. Stocks got a lift after first-time jobless claims fell by 10,000 last week to a 5-year low. And the Federal Reserve rejected plans from Ally Financial and BB&T Bank for maintaining proper capital levels in the event of another financial crisis. JP Morgan and Goldman Sachs have until September to make their plans better. And tune into Nightly Business Report right here on your public television station.